This conference will now be recorded.
Okay. Yesterday we were talking about customer incoming payment. At the same time, we also understood basics related to bank reconciliation statement or BRS. We understood there are two types of BRS. One is electronic BRS, another one is manual BRS. If it is a manual BRS, we understood bank statement details are updated manually in the SAP. In case if it is a electronic bank reconciliation, bank statement either in MT940 format or in BAI format will be uploaded in SAP. You need to understand manual bank reconciliation statement details are manually updated in SAP. In case of EBRS, bank statement is uploaded in SAP. You'll have to understand the difference. In the similar way, you need to explain to your interviewer or whosoever is asking. Next point, we will talk about integration related points in today's session, meaning let us try to understand what exactly is integration, why everybody is behind this integration in every interview. Let me write integrations. When we're talking about integration, majoritarily there are two integrations which we need to understand. First integration is your FIMM integration. First one is your FIMM integration. Second one is your FISD integration. Now it is very easy for you to understand because everybody has already practiced what is accounts payable, what is accounts receivable. Whatever you did in your accounts payable is related to vendor. Whatever you did in your accounts payable is related to vendor. Whatever you did in your accounts receivable is related to customer. Meaning you need to understand one point called vendor, another point called customer. These are the 2 points which you need to understand. When we were talking about vendor, we were talking about AP. When we were talking about vendor, we were talking about AP. Similarly, when we were talking about customer, we were talking about AR. AP or vendor is one and the same. AR or customer is one and the same. Now this AP is also represented as P2P, procurement to payment. This AR is also represented as O2C, order to cash. Procurement to payment, order to cash. Now these points, once you are able to understand, you can practically relate what it is related to accounts payable and how it is connected to MM or materials management. Similarly, when you are able to understand O2C, order to cash, and when you are able to understand accounts receivable, how it is related to your SD integration. Here, when you're talking about MM integration, it is all about purchases. It is all about purchases. And on the other side, when you're talking about SD integration, it is all about sales here. Okay, here it is all about purchases and here it is all about sale. Now we are all aware when it comes to purchases are of two types. These are the basic fundamental which we already understood, discussed during your initial sections, during our initial discussion about accounts payable module. Similarly, when you're talking about sales, we understood how sales are going to happen during our initial discussions of accounts receivable. Now, when you're talking about purchases, basically you are going to purchase three types of items or three type of things. Point number one, material. Point number two, service. Point number three, fixed asset. In short, when you're talking about purchases, you are going to purchase three types of things. One, you can purchase material. Two, you can purchase a service. Three, you can purchase a fixed asset. On the other side, when you're talking about sale, one, you can sell material. Two, you can sell services. And three, you can sell fixed asset. Three, you can sell fixed asset. These are the 3 points. These are the 3 points: material, service, fixed asset, which you will be basically purchasing, you will be selling. Now, not all purchases are directly happening from the FI side. Not all the sales are directly happening from the FI side. There are some sales which are triggering from the MM side or which are happening from the MM side. There are certain sales which are happening from the SD side. What kind of purchases are happening from MM side? What kind of sales are happening from SD side? We need to have a clarity. We need to understand the difference. When I will tell I am purchasing from the MM side, when I am telling I am selling from SD side. If you are selling from SD side, if you are purchasing from MM side, you need to have sales impact in your accounting. You need to have purchase impact in your accounting. Since MM is a separate module altogether, SD is a separate module altogether, data in MM is completely different, data in SD is completely different, data in FI is completely different. FI is different, MM is different, SD is different. Now, some transactions are happening in FI, some transactions are happening in MM, some transactions are happening in SD. Now, whatever is happening in SD, we are not bothered about it. Whatever the transactions are happening in MM, we are not bothered about it, provided there is no financial impact. If there is no financial impact, if there is no monetary impact, we are least bothered about what is happening in MM, what is happening in SD. But the moment there is a monetary impact, the moment there is a financial impact, the moment there is an accounting impact, you are concerned about it. As a FICO consultant, you are concerned about MM if there is a transaction which is having a financial impact. As a FICO consultant, you are concerned about SD if there is a impact related to financial or monetary. How I am going to know that there is an impact or there is no impact? How I am going to understand whether there is an impact or there is no impact? For which you need to understand this P2P and you need to understand this O2C. Whenever you are talking about P2P, you are talking about procurement to payment. This is nothing but procurement to payment, meaning from purchase until payment. Purchasing from vendor until payment to vendor. Similarly, O2C. O2C is nothing but order to cash. From getting the order from customer and then until receiving the cash or the money from the customer, you have to be concerned about O2C cycle. In this process, there is a scenario, there is a logic. When we're talking about in this process, there is a scenario, there is a logic. You need to understand first point. Let me put P2P cycle here. When we put P2P cycle, there are certain activities which are going to happen, which we need to understand. First point, purchase order. I'm not talking about the other points which are like your request for quotation, all these kind of things I'm not writing, purchase requisition and all I'm not writing. I am writing directly the key content, key components which you need to talk to anybody. Before this, before purchase order, purchase requisition, all things are available which we do not necessarily have to talk in the interview. Once you are thorough from this point, later on you can add additional point, but whatever I am writing is something which is mandatory, you cannot ignore. Whatever I am writing here, please make a note of it. You cannot ignore it even a single percent from it. Be very careful when I am talking, when I am explaining. These points are mandatory. As it is, you need to remember. As it is, you need to talk, if possible, a little more than that. But whatever I am talking, there is no way you can edit it. There is no editing. I am already editing and then talking to you. You please do not further edit from what I am talking. If you are editing further, then you will be at a risk. First point is your purchase order. Second point is your goods receipt note. Third point is your invoice receipt note. Fourth point is vendor outgoing payment. Fifth point is bank reconciliation statement. These are the 5 points which you'll have to remember from the P2P cycle point of view. Next thing, from the O2C cycle point of view. Which colors I'm using here? Let's say this I'll put yellow, this I'll put, let's say, blue color. Let me put blue color here. From the O2C cycle, first point you need to understand there is something called sales order. Based on the sales order, there is something called delivery. Based on the delivery, there is something called post goods issue. Based on the post goods issue, customer billing, and based on that, customer incoming payment, and finally bank reconciliation statement. This is another point that you will have here. When you are looking at it in P2P cycle, you have 5 points. In the OTC cycle, you have 6 points. Now from here, you need to understand, we understood a point or we discussed a point. You are concerned about P2P cycle, you are concerned about OTC cycle, or we are concerned about MM module, SD module only if there is an accounting impact. Otherwise, we are not concerned about it. If there is no monetary impact, if there is no financial impact, we are least bothered about what is MM, what is SD. You are talking about integration between FI and MM because MM is sending some financial information to FI. You're talking about FI-SD integration because SD is sending some financial information to FI. What financial information is coming to FI from MM, from SD? We need to understand how this is coming, how we are receiving it, how we are accounting it. To understand this, you need to have a basic or a conceptual understanding related to this. When you're talking about it, let me talk one important point called accounting impact or financial impact. Let me highlight this with, let's say, or let me put green color. Let me highlight with green color. Wherever I am highlighting green color, it is representing, or let me put green color. Green is nothing but integration point. Green color is nothing but integration point. Now purchase order, I am not going to highlight it because when you create a purchase order, when you look at any purchase order, there is no accounting impact, there is no financial impact. When there is no financial impact, there is no integration point. I'm not highlighting purchase order with green color because purchase order is not having any impact in your accounting. Next, I have goods receipt note. In short, it is represented as GRN. This is represented as GRN. Purchase order we will be representing as PO. Purchase order is PO. Goods receipt note is GRN. At GRN level or at goods receipt note level, there is an accounting impact. There is an integration point. Let me highlight green. This is green because this is having financial impact in my accounting. This is one of the integration point between FI and MM. Next thing is your invoice receipt. Whenever you have any invoice booking from the vendor invoice or from the supplier invoice, this is also going to have an financial impact in your accounting. This also I will put green. Vendor outgoing payment, this has got nothing to do with your MM. This is a pure FI transaction. Vendor outgoing payment is a pure financial transaction, pure accounting entry where there is no connection with MM module. I'm not putting any highlight here. Or let me put a highlight with a different color. Okay, and then I'll put this color here. One column. I'll put this color. and here I am going to put this is pure FI transaction not related to MM or SD integration. Okay, this color wherever I am highlighting, it is representing this is a pure FI transaction not related to MM or SD integration. This is not part of your integration, but this is part of your cycle. To complete the P2P cycle, you need to include vendor payment. For processing the vendor payment, you are not going to call it as part of FIMM integration, but this is part of P2P cycle, not part of integration. Similarly, bank reconciliation also straight away FI entry or an accounting transaction, no connection with your purchase order, no connection with anything. This is also pure accounting transaction. Wherever I am highlighting this light orange color, it is representing pure FI transaction without having any link to your MM SD integration. On the other side, if I go to OTC cycle, sales order, when you are creating a sales order, when you are looking at any sales order, there is no accounting impact here. At the sales order, there is no accounting impact. I am leaving it blank. When you are creating a delivery also doesn't have any accounting impact. I am leaving it blank. Delivery also I am leaving it blank. When it comes to PGI, okay, when it comes to PGI, this is called as PGI. Okay, this is called as PGI. When you're talking about PGI or post goods issue, this has an accounting impact. Wherever there is an accounting impact, wherever there is an integration point, we are highlighting it with green color. Let me highlight it with green color here. Let me highlight green color here. Next one, you have customer billing. Customer billing is also an integration point because whenever you create any invoice bill to the customer, there is an accounting impact, debit and credit. Let me highlight this one also here. After this, you have customer incoming payment. This is again pure FI transaction, not related to FI MM or FIST integration. This is a pure accounting entry which is posted in your FI module independently without having any dependency on your SD module. What I'll do, if it is a direct FI transaction, let me highlight this color here. Okay. Similarly, bank reconciliation statement. This is again direct accounting entry which is posted in FI, not related to any integration point. Now, out of these two P2P, out of this cycle called P2P or OTC, there are only 4 points which were identified as integration point. In MM side, there are 2 integration point. In SD side, there are 2 integration point. In short, this P2P cycle is nothing but FIMM. This OTC cycle is nothing but FISD here. This is your FIMM integration. The other one is FISD integration. We have highlighted 2 points in MM, 2 points in SD, which are represented as integration point. Now, when you're talking about integration point, you need to understand what exactly we mean by integration point. Now, let us try to understand these fundamentals. Integration point means there is an accounting or financial impact. Okay. Integration point means there is an accounting or financial impact. According to this, we need to have certain basic fundamental. Point number 1. Journal entry or accounting entry is posted. Point number 1, journal entry or accounting entry is posted. When there is a journal entry, when there is an accounting entry, that is where we are talking about integration point, wherein there is an accounting impact or financial impact. Accounting impact, financial impact is possible only when you write journal entry or accounting entry. Basic fundamental, which we are all aware of, it is the same point applicable here also. When you're talking about journal entry, you need to understand debit and credit. We need to understand debit and credit. In each of the scenario, wherever we have highlighted that there is an integration point, at this integration point level, there is a debit, there is a credit, which will be recorded as an accounting transaction, accounting entry. We need to know which debit, which credit will be used. In short, what account will be debited, what account will be credited, on what basis. What account will be debited, what account will be credited, on what basis. When you understand, it is easy for you to relate your FIMM integration, FIST integration. This one you are not supposed to by heart, you are not supposed to mug up. You need to understand in a logical way, conceptual way. Here, when you're talking about P2P cycle, OTC cycle, it is all about purchases, it is all about sale. Because P2P cycle is beginning from purchase order. Purchase order is created to make a purchase. Sales order is created to make a sale. It is very clear. Purchase order is representing purchase. Sales order is representing sale. When you're talking about purchase, you need to know what are we purchasing. When you're talking about a purchase order, you need to understand what are we purchasing. Here, we are representing the organization, a company. When you're talking about what are we purchasing, it is not your personal purchase, it is your organization or it is your corporate purchase. Anything that you're purchasing for yourself is a personal purchase. Anything that is purchased by an organization is nothing but a corporate purchase. Okay. When your company is purchasing, you need to understand what will generally a company purchase. If you go top, we have clearly represented here purchases. We have included 3 points here. From the purchases, we have included 3 points. One, you may purchase a material. Material is also nothing but inventory. It is also nothing but your stock. You can purchase material, you can purchase inventory, you can purchase a stock. Okay. Second one, we were talking about service. Service is also nothing but OPEX. Service is also nothing but OPEX or P&L expenses. Second one, when you're talking about services, service is also called as OPEX. OPEX is nothing but operating expenses, or you can call it as P&L expenses. P&L means profit and loss expenses or operating expenses are nothing but services that you are procuring. Okay. Last one is your fixed asset. Fixed asset is also called as asset, or it is also called as CAPEX. In short, it is represented as capital expenditure. In short, it is represented as capital expenditure. These terms slowly we have to make sure that yes, we are able to relate the terms. We are able to make sure that we are familiar with the terms. If you are not familiar with these terms, all the alternatives, whatever is listed here, again that is going to create a confusion. Make sure you relate the points as it is along with the same example. Material, inventory, stock are one and the same. Service, OPEX, P&L expense is one and the same. Fixed asset, CAPEX are one and the same. Same thing here also. Material or inventory or stock, it is one and the same. Similarly, services or OPEX or P&L expenses. Fixed asset, when you talk, we were talking about asset, we were also talking about CAPEX. Now here comes the question. Here what we need to understand, out of this, what we are going to use in your integration. Out of this, what we are going to use in our integration from the P2P cycle point of view or from the FIMM integration point of view, these three are used. From the FIMM integration point of view, material is used, service is used, fixed asset is used. But when it comes to SD integration point of view, only two are used. Fixed asset we will not be considering for the SD integration. In the SD integration, it is only two. In SD integration, as I mentioned, it is only two. material and service, we will not be considering fixed asset in the FI/SD integration. Fixed asset sale is treated from the asset accounting module only, not from the SD side. SD side, you are not going to treat fixed asset. Fixed asset is treated from the asset accounting submodule from the financial accounting or from the FI side. Keep only these 2 points from here. Third one, you'll have to ignore it, meaning this is not part of your SD integration. Now, if I come down, okay, if I come down, this is what we have listed. Third one, accounting entry is not posted manually in integration process. In integration process, accounting entry is not posted manually. It is not that we are posting it manually. We will not be posting manual entry. So far, in your accounts payable, in your accounts receivable, what we were doing, you were posting invoice manually. You were posting invoice manually, meaning purchase invoice we were posting manually, which means vendor invoice we were posting manually using F-43. Similarly, customer invoice also we were posting manually using F-22. So far, whatever the invoice processing that we did, it was manual. But when you're talking about integration, in your integration, accounting entry is not posted manually. What will happen? In FIMM or FISD integration, accounting entries are posted automatically. In FIMM or in FISD integration, accounting entries are posted automatically. How system is posting accounting entries automatically? Again, there are certain points which slowly we need to understand. Now, automatic accounting entries are happening based on account determination concept. Okay, automatic accounting entries are happening based on account determination concept. Now again we need to understand what is account determination. We may be thinking this is something that I am coming to know newly. This is not something which is new to you. This is something that we have already configured. So far, if you take an example, point number 6, example of account determination. This is basically GL account is automatically updated or posted with account determination. GL account is automatically updated or posted with account determination. Example, what we have seen so far is realized exchange loss gain accounts are automatically updated or posted during payment interest. This is something that we all have noticed while practicing accounts payable, accounts receivable. Whenever you were processing any payment, you would have got one error called exchange rate different accounts are incomplete. For this, what you did, you would have configured OBA1, OB09, wherein you have selected the respective GL account called accounts payable or accounts receivable. Against that GL account, you have updated realized exchange loss account, realized exchange gain account. Based on this, system is automatically adding additional line item called exchange rate loss or exchange rate gain, though you are not giving it manually. Even though you are not giving it manually, automatically at the time of simulation entries are coming. That is because of your account determination, whatever you are maintaining. Similarly, discount postings. When you're talking about discount postings, based on payment terms, GL account related to discount allowed or received is posted automatically. This is another point that we need to understand, and the other one is, let me write, automatic payment program bank GL account. Okay, based on app config bank outgoing GLs are auto posted or auto updated posted. I am writing these points just to trigger some points in your mind, so that you will not think that account determination something new to me. These are all called as account determination, which you have already seen, which you are already aware of. Nothing new in your FIMM integration. It is the same logic, because everything is called as account determination. Tomorrow somebody might put a question to you, what do you mean by account determination? So you will be in a position to do it. And there is one more point called zero balance clearing account as part of document splitting. There's one more point called zero balance clearing account as part of document splitting. This is also one of the account determination setting. Whatever the examples that I have listed so far, the 4 examples are related to account determination. Likewise, there are many others, but I'm not writing everything. Whatever we have done so far, whatever you can relate it at this moment, only those points I'm writing. Here, what we are doing, you are maintaining a GL account somewhere in the configuration. These accounts are not updated manually. These accounts are updated automatically based on the transaction. Whenever such incident happens, whenever that transaction is happening, automatically system is recognizing at this moment I need to put this account. This account will have to be configured in some place. In SAP, there are transactions, there are tables, places at which system is going to automatically look for a GL account. If you maintain that setting, GL account will be picked up from there and it will be automatically posted. If not, it will not post the entry, it will throw an error. What you need to understand from the account determination, it is nothing but a configuration in which GL accounts are maintained. It is a configuration in which GL accounts are maintained. Whenever your entries are being posted, automatically GL account is picked up from your configuration related to account determination based on the transaction, based on the process, based on the scenario. Based on the process, based on the transaction, based on the scenario, your account determination settings will come into picture. Once you understand these points, FIMM integration, FIST integration is very simple. Logic, fundamentally you need to understand how system is detecting it. If you are able to relate these points, it will not create any confusion while understanding account determination related to FIMM, FIST. It is all about account determination only. FIMM, FIST is all about account determination, wherein we are all concerned about journal entry, accounting entry, how it is getting posted, what is debit, what is credit, how system is bringing a debit GL account, how system is bringing credit GL account, on what basis. On what basis debit GL account is posted and on what basis credit GL account is posted. How these are determined in SAP is all about your FIMM, FIST integration. Here, first point that you need to understand. Remaining points I'll update as and when we require it. And as of now, these points are sufficient. First point, you need to understand something called purchase order. First point is your purchase order. Second point is sales order. When you are creating a purchase order, all the purchases are based on POs. When you're talking about purchase order, all the purchases are based on POs. When you're talking about sales, all the sales are based on SOs. All your sales are going to happen based on the sales order. When you're talking about a purchase order, you need to understand what kind of a purchase order it is. Overall, it is a purchase order, but within the purchase order, there are certain categories, there are certain types. First one, I'll say material PO. In short, when you are purchasing any material, any stock, any inventory, it is nothing but material PO. Second one, it can be service PO. Third one, it can be capex PO. Fourth one, it can be import PO. Fifth one, it can be, let's say, STO PO. Like this, there may be multiple types of purchase order that you need to understand. Don't blindly remember purchase order means purchase order. Within the purchase order, there may be material purchase order, there may be service purchase order, there may be capex purchase order, import purchase order, STO purchase order, stock transport order purchase order. It can be anything. Next one, when it comes to sales order, though everything is a sales order, I may say material sales order, I may say service sales order, I may say export sales order, I may say intercompany sales order. Likewise, there may be different categorization that you need to slowly understand. Meaning, when you're talking about sales order, don't blindly remember sales order is a sales order. It is not sales order. Sales order, you need to understand what kind of a sales order are we talking about. So that tomorrow when somebody is asking, accordingly you can talk, accordingly you can explain. The way you're talking, the way you're explaining should be something realistic, should be something practical, should be something unique from others. Only then you will be highlighted. Only then the other person feels, yes, this candidate is aware of the subject. This candidate is aware of the business process concept. Now, when you're talking about material, in the material, you are going to purchase material. In the service, you are going to purchase a service. In the capex, you are going to purchase asset. In the import purchase order, you are going to import from the other countries. In the STO, you are transferring material from one location to another location. Here, when you're talking about material SO, you may be selling material. Material sales order means you may be selling material. Services sales order mean you may be selling services. Export to sales order, maybe you are selling to somebody who is in other country. Intercompany sales order means you may be selling to another fellow subsidiary company or another affiliated company. Once these points are clear, we need to understand. First, let us go through purchase order. When you go through the purchase order, certain points we need to understand. First thing, let me straight away put accounting entries. Then I'll explain other points considering accounting entries in the picture. Let me put accounting entries here. Accounting entries, first one, in case of material PO. Accounting entries, FIMM, material purchase order. Okay, material purchase order. In the material purchase order, first point, there are only 2 points where we were talking about. There is an accounting entry. In P2P cycle, if you see, there are only 2 points where you have listed. Point number 2, point number 3. Scroll down. Okay, put this here. I'm not removing 2, 3 because this is coming from the top. When you refer top side, I want you to remember this is point number 2. Point number 1 is your purchase order where we've listed there is no accounting impact. That is why I'm keeping same content as it is with point number 2, goods receipt note. At this stage, if your purchase order is a material purchase order, if your purchase order is a material purchase order, I am going to write AAC is equal to blank. When I say AAC, account assignment category. AAC is nothing but account assignment category is equal to blank. Okay. Now, your accounting entry will be inventory account debit GRIR clearing account credit. This is the accounting entry in case if you purchase any material. How you will identify this is material purchase order? In the purchase order, if AAC is blank, AAC is nothing but account assignment category. In the purchase order, if the account assignment category is blank, it is represented as material purchase order. For material purchase order, accounting entry, when it comes to GRN, it is your inventory account debit, GRIR clearing account credit. Now this is posted using T code MIGO. This is posted using transaction code called MIGO. Inventory account debit, GRIR account credit. Let me put some amount here. Let's say 1000 here, 1000 here. Debit, credit 1000. Accounting impact, amount is 0. As we discussed, whenever you put any amount, you should always put the amount in the accounting language, meaning you have to put accounting signature called this comma. If you put comma style, this will become accounting format. So that all the positive number will appear as it is, all the negative number will have a bracket, so that it will be easy for anybody to identify this is a credit balance, this is a debit balance. Debit and credit should be equivalent to 0. That is where total is 0. Okay, this is your accounting entry in case of GRN or in case of MIGO if your purchase order is material PO. On the other side, when you are creating any invoice, and this T code is MIRO. Okay, this T code is MIRO. In this situation, your accounting entry will be GRIR clearing account debit and your vendor account credit. In this case, GRIR clearing account is on the debit side, vendor account is on the credit side. Same amount, it will be 1000. It will be 1000 here. As we know, whenever you put the amount, always make sure you put in the accounting format so that it is very easy for you to understand. These are the accounting entries that are recorded in case of a material purchase order wherein account assignment category is blank. These are the two accounting entries. Similarly, I copy paste the same thing. Now I'll put service PO, account assignment category will be K. Okay, account assignment category will be K. K is nothing but cost center. Account assignment category K. K is nothing but cost center. Now here your accounting entry will be 2 points. Same thing I'll copy. Let me replace the debit and credit accounting entries here. At the time of goods receipt or MIGO, since this is not a material, this is a service. This is not a material, this is a service. If you scroll up, we have listed something. When you're talking about a service, if you scroll up, when you're talking about a service, we understood service is nothing but CapEx, OPEX. OPEX is nothing but a P&L account, expense, GL account. Everybody knows what are P&L expenses. It can be rent, it can be stationery, it can be any other expense. In short, it is a P&L expense account which is represented as a service. Here, your debit is not going to be inventory account. Your debit is going to be the P&L expense account. This is going to be P&L expense account debit, GRIR clearing account credit. Here, your accounting entry is going to be P&L expense account debit, GRIR clearing account credit. Make a note, in the P&L expense account, you can replace any expense account. Remember, in the P&L expense account, you can replace any expense account for which you are rendering or for which you are receiving the service. I may say that I am receiving auditing services, I am receiving catering services, I am receiving printing and stationery, I am receiving mechanical services, I am receiving advisory services, I am receiving consulting services. It can be anything. At the end, it is supposed to be P&L account, expense related GL account. It is very simple. P&L account, expense account is supposed to be debited. It can be any expense, whatever you are purchasing. It can be any expense, whatever you are purchasing. Please make sure you are able to understand it. Next thing, credit will remain the same. GRIR clearing account credit. Amount I am taking the same. 1000 on the debit side, 1000 on the credit side. When it comes to the invoice receipt, it will be the same. There is no change in the invoice entry because GRIR clearing account will be on the debit side, vendor account will be on the credit side. This will remain the same. This is your purchase order. In case of a service, you will identify the service with the help of account assignment category SK. If it is a cost center, if it is a order, you can be creating it as F. I'm not writing F. It is better you understand with K first. Once you are clear, you can add additional point. But initially, we need to make sure we are comfortable with the basic fundamental. Once you're comfortable, once you're clear with the basic fundamental, you can elaborate it more, you can extend it more so that there's no point of any confusion. You will be clear with even though you're adding additional scenarios. Now let us take about the third point. If I take the third point, let me put the same things here. Copy. If I put this here. Accounting entries, again FIMM integration. This is now CapEx PO. Account assignment category will be A. For CapEx PO, account assignment category will be A. A is nothing but asset, in short fixed asset. In case of a fixed asset, there are 2 points here. You can capitalize the asset at the time of a GRN. You can capitalize the asset at the time of a GRN, or you can capitalize the asset at the time of invoice. Usually what we all follow in the real environment is we don't capitalize the asset at the time of a GRN. Instead, you will capitalize the asset at the time of invoice. Considering this, here there is no accounting impact. Here, no accounting impact. Okay, there is no accounting impact. This is non-valuated GRN or non-valuated. I can say non-valuated GRN. When you're talking about non-valuated, you're not updating any value at the time of GRN. When there is no value, there is no accounting impact. There is no accounting impact, there is no accounting entry. As simple as it is blank. No accounting impact. In case of accounting, in case of CapEx purchase order, at the time of GRN, there is no accounting impact because your GRN is non-valuated. Similarly, when it comes to invoice receipt, your accounting entry is not GRIR clearing. Instead, it is your fixed asset debit, vendor account credit. This is supposed to be fixed asset debit, vendor account credit. This is the difference that you need to understand. Tomorrow, when somebody is asking you accounting entries related to FIMM integration, this is what they want to hear from you. But majoritarily what we all will tell, blindly we will tell inventory account debit, GRIR account credit. But unfortunately, there are 3 scenarios here. Your answer will go wrong. When there are three scenarios, you are blindly telling inventory account debit, GRIR account credit as part of FIMM integration, you are marked as incorrect because there are 3 points here. Point number 1, material PO. Point number 2, service PO. Point number 3, capex PO. You are blindly telling inventory account debit, GRIR account credit. You are not putting any heading, you are not putting any disclaimer stating in case of a material purchase order, accounting entry for FIMM integration will be inventory account debit, GRIR account credit. We are not clear in our explanation. The other person is very clear in his understanding that you know nothing, or your understanding is not clear. You do not know what is FIMM integration. Your knowledge, your understanding is something which is incorrect. Do not get such kind of impression, feedback from the other person because of what you're talking. Make sure wherever there are multiple scenarios, please put a clear instruction. Please clearly indicate that I am telling the accounting entry related to this particular scenario. Whenever somebody is asking about FIMM integration, you have to strictly talk about these 3 points: asset purchase order, service purchase order, material purchase order, whatever the accounting entry that you tell. Tell accounting entry only by putting this heading: capex purchase order. Mention no accounting entry at the time of GRN because asset is a non-valuated receipt. You are treating your asset as a non-valuated GRN. Since it is non-valuated, no value, no accounting entry. Very simple. No value, no accounting entry. No value is nothing but non-valuated. And when it comes to invoice booking, you are not booking GRIR account debit here. There is a difference. This is your fixed asset account debit, vendor account credit. Now on top, when it comes to a service, service is always a P&L account, expense account. We understood. Whenever you create a P&L account as part of your basic accounting posting, we understood all the P&L accounts will have to be treated as cost element. Cost element, you have two types of cost element: primary cost element, secondary cost element. All your FI accounting entries will be representing primary cost element. In the primary cost element, you are talking about expense. Expense is treated as primary cost element. These primary cost elements will require a cost object. Any primary cost element that you are booking will require a cost object. Cost center will become a cost object here. All the primary cost elements are nothing but expenses. Expenses, if they are treated as a cost element, cost object is mandatory. Cost center is a cost object here. In short, whenever you are creating a service purchase order, GL account is supposed to be an expense account. Expense account will be updated along with the cost center. Cost center is represented as account assignment category called K. In your interviews, people might straight away put a question: what will be the accounting entry in case if your purchase order is created with account assignment category K? They'll not tell service PO and all. If they say if PO is created with account assignment category K, what will be the accounting entry? How your integration will work? They are expecting same thing. This only they are expecting, but question they are asking in a different way. If you know this is what it is, you will find this is very simple. I'll easily answer. You can easily answer. If you do not know, you will end up telling inventory account debit, GRIR account credit. There is no stock here, but you are telling inventory account debit. Upfront 0 out of whatever the number that you put. 0 mark. You will be rejected. When people say I am attending interviews, I am telling the answer, I am not able to get the result. Reason, you are telling the answer, but your answer is not according to the question. Whatever my question, according to you, integration means the same point. That is wrong. Okay. This is in case if your purchase order is account assignment category K, service PO. P&L expense account debit, GRIR account credit during the MIGO. During MIRO, it will be GRIR account debit, vendor account credit. Similarly, let me do a total here so that this also becomes 0. And on the top, if your purchase order is created for material, with the purchase order, if you are purchasing any inventory, if you are purchasing any stock, your accounting entry at the time of MIGO. Or how do you identify that the purchase order is for material? For all the material related purchase order, account assignment category will be blank. Somebody might ask you, How do you know that this is a material purchase order? How do you identify that this is a material PO? The logic is account assignment category for all the material purchase order will be blank, and the accounting entry will be inventory account debit, GRIR account credit. Similarly, at the time of invoice booking, GRIR account debit, vendor account credit, these are the basic fundamental accounting entries related to FIMM integration. Only if you know these accounting entries, you can further understanding other scenarios related to integration. Meaning your price difference, tax, all other things will be possible for you to understand, provided you are clear on these entries without having any confusion. Meaning on these three accounting entries, whatever are currently listed, you are supposed to have zero confusion. You should have 100% clarity, 100% confidence, 0% confusion. Even if there is a 1% confusion, this one will attract two zeros. 100% you will be confused. So do not have any confusion here. This is the basic fundamental point. If you are clear on this, all the integration point, you will be able to easily understand, even if I do not teach, even if I do not tell. With the help of this, you can understand any integration scenario, because this is the base. If you have the strong base, if you have the proper understanding of the basic fundamental, anything that you're adding on top of it is very simple to understand. Okay, these points are related to your FI MM integration. Similarly, you have FISD integration. In the FISD integration, we were talking about there is an accounting impact only at the two situations, PGI and billing. One is at the PGI, another one is at the billing. Come down. We were talking about only two types of sales there. We are talking about only two types of sale. What I will list here is, let me put this and let me put this. Okay, when it comes to this one, and then I'll also put this thing. Why I put green here? Because this is this. Okay, so I'll put green here also, so that there is no confusion here. Let me put green here. Let me put green here. Okay. Yeah. We've listed green because this is an integration point, accounting entry. Now let's go down. Okay. In this, if I update the first point, accounting entries in case of FI SD integration, this is a material sales order. There is no account assignment category here. Okay, there is no account assignment categories here. Thus, I am removing it here. Okay, I'm removing it here. This is basically not applicable for SD. This is applicable only for MM. But I'm not removing that point. I'm just writing it as material sales order. In case if you are selling a product, what is going to happen? There is something called post goods issue, which is nothing but PGI. Accounting entry will be cost of goods sold is debit, and inventory account credit. Same thing. Let me take 1000 here. Let me take 1000 here. Let me do a total. I'll put this in accounting format. Accounting entry is COGS account debit. Cost of a goods sold is nothing but COGS or COGS. Somebody may call it as COGS. Somebody may call it as a COGS. But at the end, it is the same thing called as cost of a goods sold account. Cost of goods sold account debit, inventory account credit in case of a PGI. Next one, you have something. Why I have two spaces here? Okay, fine. Next one, you have a customer billing. When you are creating a billing or when you are giving the invoice to the customer, your accounting entry will be customer account debit, sales account credit. Customer account debit, sales account credit. Let me put the same amount, 1000 here and then 1000 here. Okay, but here I'm not writing 1000. Let me put 1200 here, 1200 here. I will tell you why I am writing 1200 1200. Why my PGI billing is different here, and if you look at it, why my GRN invoice is the same here. There is a logic here which I'll explain in the upcoming sessions. But at this moment, remember, your PGI document, your billing document are not supposed to be at the same value. They are supposed to be at a different value. PGI is at a lower value, invoice is at a higher value. Because when you're making a sale, you are expecting a profit. Profit is nothing but a difference between COGS and sale. If you remember your basic accounting fundamental, gross profit is equal to, or profit is equal to, sales minus cost of goods sold, or sales minus purchases minus direct expenses. Purchase value plus direct expense value together is called as a COGS, or cost of goods sold. Okay. Now this is in case of your material sale. This is in case of your material sale. In case if you are making any service sale, it will be the same accounting entry. It will be the same accounting entry. For example, service sales order. Technically there is no difference, but still let us write down to make sure when you're talking, you can practically understand the points. PGI will remain the same. Cost of goods sold account debit, inventory credit. When you're talking about inventory, you're talking about material here. Inventory is nothing but material. In the material you have stock material, non-stock material, or stock material, service material. Inventory is replacement word of material or stock. Stock can be treated as stockable item, non-stockable item. In short, service item, stock item. Your material is also represented as a service. Let's say inventory service. In short, this is nothing but a service material. In short, this is nothing but a service material credit, but technically you remember this as a material only. We will be representing service material and then the normal material. This is the accounting entry in case of it. And these are the accounting entries that you have to go through or remember, which is mandatory, strictly no exception here. The way you tell I do not know my name, in the similar way you cannot say I do not know FIMM accounting entries. You forget about it if you forget your name. The way you know your name, in the similar way you need to know it. No exception, 0% tolerance here. If you are not aware of this accounting entries, clearly conceptually, please do not attend any interview. Upfront I am telling, do not attend any interview if you do not know this accounting entries, if you are not in a position to talk in a confident way. Next thing that we need to understand, two more points. T codes used to configure integration setting. You need to understand the T codes. You also need to understand the tables. Now, first one, FIMM, T codes, and tables used to configure FIMM integration. Okay. FISD. Okay. Description. FIMM we are highlighting with yellow. FIST we are highlighting with blue. This is just a note. I'm just updating any one color randomly here. Okay. First one is your T code. Second one is your table. For FIMM integration, we will be using a transaction code called OBYC here. OBYC is the transaction code wherein FIMM integration setting is maintained. First point. Second point, table will be T030. For FIMM integration, T code is OBYC, table is T030. On the other side, for FISD integration, it is your VKOA, and then this will be C001, C002, C003, C004, C005. These are the table. These points which are very important from your interview point of view. You cannot say I do not know. Strictly not possible. If you tell you do not know this, you are not able to answer this, upfront you are rejected. You don't need to wait until your interviewer HR comes. We will get back to you. You can leave from there. Don't even expect a call back if you are unable to answer these points. Don't wait for your HR to call somebody to explain what is the feedback. You know the feedback, you are rejected upfront, no doubt about it. Okay. At high level, if you scroll up, whatever the points that I have listed as part of FIMM integration, as part of FIST integration, these points are very important. I've listed only the points which are required at very basic level, without which you will not be able to understand FIMM, FIST integration in SAP are listed here. I have not listed everything. I have listed, written down only the points that you cannot skip. These points you must know, and once you are aware of these points, it is practically possible for you to understand how integration works in SAP, how FIMM integration works in SAP, how FIST integration works in SAP, what are the accounting entries. These alone you remember. Next time or in the next session when we talk about further points related to this integration, I am going to talk about how this account is being debited, on what logic, how system is detecting that I need to debit inventory account, on what basis you are going to maintain the combination setting, that we will discuss in the next session when we talk about integration. Similarly, on what basis system is detecting it, why we are taking 1000 here, why we are taking 1200 here, why not the same amount, all these points we will talk next time when we talk. But before I talk the further points, or before I elaborate further on this point, I want everybody to be clear with this fundamental. If you are not clear with these fundamental, upfront I am telling you are not going to understand FIMM integration concept. I'm not talking about FIMM integration config. I'm clearly mentioning concept you will not understand, because T code is the same thing. Single T code, single T code, single table, 5 tables. Very simple to identify. But you will not be able to explain. You will not be able to understand your interviewer question. You will not be able to understand the errors that you are receiving in your project if you are not clear with these fundamentals, whatever we have listed. If you are clear on this thing, you will be able to understand integration in a very good manner. You will be able to explain even better than what I talk on this integration. It's all about what is your level of understanding. Accordingly, you can put it in any way. If you know the subject properly, you can talk in any way to convince the other person. Please make sure you understand the logic, you are clear with the concept, then you can talk in such a way that the other person feels that yes, this candidate is aware of the concept, this candidate is aware of the subject. At the end, this is what you are expecting, this is what you are supposed to project, showcase to the other person, especially when you're in the interview, when you're in the project, when you're talking to the user or client. All right. Let me stop this here, and the remaining points, the other topic, whatever I've discussed that I'll be covering in this week, we will talk in the tomorrow's session. All right. Let me stop this recording.